Welcome to the Deep Dive. Today we are diving into the Q2 2025 earnings call for PolyPid, ticker PYPD. This was a pre-market callback on August 13th, and management really framed it as, quote, truly transformational. But, you look at the stock, just a modest 2% lift after what seemed like great news. So there's this tension, right, between this clinical win and, well, the financial picture. Our mission today, unpack that tension. We'll look at the key clinical data, figure out the financials, and see what the market really wants from PolyPid now.
Yeah, that tension is exactly it. It's a core story here. You've got genuinely groundbreaking phase 3 results on one side, but then the reality of being a development stage biotech, well, it hit the bottom line hard.
Okay, let's start with that reality check then. It sounds like a classic biotech mixed bag. What did the numbers actually show?
Well, the financials were the immediate thing people noticed. The company reported a GAAP net loss of minus 78 cents per share.
Yeah.
That significantly missed the consensus, which was looking for more like minus 57 cents. Net loss for the quarter overall was $10.9 million and zero revenue, but, that was expected.
Right, standard for a company finishing up phase 3.
Exactly. But that wider loss, missing by that much, it definitely put some pressure on the story right away.
Yeah, that negative 78 cents per share. It's tough for investors to just brush past. So how did management manage to pivot the conversation so effectively towards the DPLX 100 data? And why didn't investors sort of buy it, even a little?
They pivoted because, frankly, the data was just undeniable. The main event, the whole focus, was the successful completion and the positive readout of their phase 3 SHIELD 2 trial. That's for their lead asset, DPLX 100. And that success, well, it profoundly de-risked the asset. The market saw that. They acknowledged that clinical milestone, and it kind of outweighed the temporary financial miss.
Okay, let's really unpack that clinical success then, because some of these data points are quite significant. DPLAX 100, it's designed to prevent surgical site infections, SSIs, right? Particularly in things like abdominal colorectal surgeries. Management really focused on the primary endpoint. What exactly was that, and why is hitting a composite endpoint often seen as, well, pretty challenging?
Right. So they met that primary composite endpoint, showed a statistically significant 38% reduction. And the p-value was impressive too, less than 0.005.
38% reduction. Wow.
Yeah. And what makes hitting a composite endpoint so powerful is that it bundles several different bad outcomes together. In this case, it was deep and superficial SSIs, all-cause mortality, and surgical reintervention, all rolled into one measure.
So you can't just get lucky preventing, say, minor infections.
Exactly. You have to show this broad, fundamental protective effect across everything, including, crucially, mortality.
That makes sense. That broad effect really suggests a real impact. But I heard some of the more specific data really caught people's attention too, like the overall SSI rate.
Yeah, the more granular data was very strong. A robust 58% reduction in the overall rate of surgical site infections. That was comparing the DPLEX 100 arm directly to the standard of care arm. Again, highly statistically significant, p less than 0.005.
58% reduction overall. That's substantial.
It is. And here's the stat that I think really defines the value proposition here. There were 0 deep SSI cases reported in the DPLEX 100 treatment arm.
0. Compared to what in the control group?
Compared to 5 deep SSI cases in the standard of care arm.
Okay, 0 versus 5. DIB infections are the really bad ones, right? The ones that lead to major complications, readmissions.
Devastating. Often lead to sepsis, major costs, terrible outcomes for patients. So hitting 0 there is remarkable.
That 0 deep SSI number feels like a slam dunk, not just scientifically, but economically too. When you talk value, you have to remember SSI costs the U.S. health system, what is it, up to $10 billion a year?
That's the number often cited, yeah.
Yeah.
And each individual case can add like over $20,000 to a hospital bill.
So if DPLX 100 can really prevent those, especially the deep ones, the reimbursement argument, the hospital adoption argument, it becomes incredibly compelling.
Absolutely. You've basically taken the clinical risk off the table. Now it just comes down to execution.
Right. Speaking of execution, what's the plan now? What's the regulatory path forward after clearing this huge clinical hurdle?
Management sounds like they're pushing hard for the new drug application, the NDA submission. They're targeting early Q1 2026 for that FDA submission.
Early Q1 26, that feels pretty quick.
It is an accelerated timeline. It's helped a lot by the fact DPLEX 100 already has FDA Fast Track and Breakthrough Therapy designations. Those really smooth the path.
So those designations actually mean something in terms of speed.
Oh, definitely. And a critical next step they mentioned is a pre-NDA meeting with the FDA. That's planned before the end of this year, 2025, just to really lock down the submission strategy and make sure everything's aligned.
Makes sense. And preparing for this next phase, it's not just about paperwork, right? They made a key leadership change too.
They did, yeah. Specifically, they announced Dr. Tweezer-Zaks as the new chief medical officer. She's actually transitioning from the board of directors into this operational role.
Interesting. From the board to CMO, what does that signal, do you think?
Well, it signals a pretty clear strategic shift, moving from just pure clinical research towards regulatory finalization and getting ready for commercial launch. Bringing someone with that board-level experience into the C-suite for this critical handoff, it shows they're serious about executing the launch plan.
Okay, good context. Let's circle back to the money, though. The phase 3 success explains higher R&D costs, sure, but the market also seemed to react to that jump in G&A, the general and administrative costs. Where did that financial drag actually come from? What's behind that number?
Yeah, the rising operational costs were, in a funny way, kind of success-based liabilities. Research and development, R&D expenses climbed to $6.2 million. That was up about $1.5 million year over year. And that was mainly driven by, wrapping up the phase 3 trial and all the expensive regulatory prep work, like the CMC modules, chemistry, manufacturing, controls. That stuff costs money.
Okay, that makes sense for R&D. But the G&A spike, that seemed like the bigger driver for the EPS miss.
Precisely. G&A jumped quite sharply to $2.5 million. That's up $1.4 million compared to the year before. And management was really clear on the call. This increase was mostly non-cash stock compensation.
Ah, stock comp. So translating that, basically they had to pay out success bonuses.
Pretty much. It triggered the vesting of performance-based stock units the moment those successful SHIELD 2 results landed.
So good news literally cost them money on the P&L.
Exactly. Good news costs money. But the market often just sees that wider net loss number first, which, can definitely spook investors who aren't digging into the footnotes.
Right.
Okay, so despite that success-driven spending, liquidity was a focus. Did they give reassurance on the cash runway? How long can they keep going?
They did. And that was important. Liquidity was actually significantly bolstered earlier in the quarter. They had some successful warrant exercises that brought cash in. So the balance sheet looked pretty solid. Cash equivalents, short-term deposits, all totaled $29.5 million as of June 30th.
$29.5 million. And the guidance.
Crucially, they explicitly guided that this cash balance is enough to fund operations well into 2026.
Well into 2026. Okay, that changes the conversation a bit.
It really does. It shifts things away from just survival mode and more towards, strategic optionality. They have time to make moves.
And that optionality, that hinges pretty heavily on getting a U.S. partner, right? What's the latest on their commercial strategy? How are they planning to sell this thing? Yeah, the U.S. market is the big prize here. The primary goal is finding a strong U.S. partner. They need someone with a dedicated, hospital-focused sales force to really maximize the potential of DPOEX100, especially with that compelling health economics data we talked about.
And are they actively looking?
They confirmed they're actively evaluating opportunities right now. Separately, for Europe, they already have that exclusive licensing deal with Advanced Pharma. That's active. They did mention they're working with Advanced Pharma to potentially adjust some existing milestone payments.
Trying to maybe pull some cash forward.
Potentially. They expect payments both from existing partners like Advanced and hopefully from new U.S. partners to further strengthen the balance sheet down the line.
Okay, so this brings us right back to that core tension we started with. You've got this de-risked data, the balance sheet looks okay, runway into 2026. But the stock, PYPD, it hasn't really popped. It was down almost 3% in 3 months leading up to early October. Meanwhile, the general biotech benchmark, the XBI index, was up, 19 to 24% in that same period? The data looks like a slam dunk scientifically. So why did the stock barely nudge 2% on the news itself? What gives?
I think the market is basically saying, show me the money, or rather, show me the deal. They don't seem to fully believe in the execution part yet. Clinical de-risking, even this strong, just isn't enough in this current market environment.
So data isn't enough. Investors need
What?
a signed deal.
Pretty much. They're demanding concrete business development or BD updates. That means, an upfront payment from a partner, a confirmed term sheet they could look at, or at least confirmed NDA milestones that are absolutely set in stone by the FDA.
Proof of commercial execution.
Exactly. Proof of commercial execution. And even with data this good, landing a major U.S. partner is still a huge task. The market knows that.
That skepticism makes sense. But didn't management also sort of unveil a surprise on the call? Something that expands their options beyond just infection prevention?
He did. That was the other really interesting part. The long-acting GLP-1 delivery platform.
Right. That came a bit out of left field.
It was a crucial strategic reveal, I think. They're basically leveraging their core PLEX platform technology. Remember, PLEX is that lipid-based matrix. It's designed for localized, sustained drug release, crucially, without that initial high-concentration burst you see with some delivery systems.
Okay, so using that PLEX tech for GLP-1s, the weight loss drugs.
Exactly. They're aiming to develop roughly a 60-day subcutaneous release GLP-1 receptor agonist.
60 days, non-burst release, targeting obesity and diabetes.
Wow. It signals huge confidence in the versatility of their PLEX platform. It opens up completely separate, massive, high-growth BD paths, totally away from the surgical infection space.
So it basically tells the market, hey, our tech isn't just for antibiotics.
It's a valuable drug delivery system that could work for arguably the hottest class of drugs in the world right now. That's a big bet on the platform itself, beyond just DPLEX100.
Okay, so we have this mixed picture. Huge clinical win, but a financial drag. BD skepticism, but then this massive new optionality play with GLP-1s. Given all that, what are the key near-term catalysts we should be watching for? What moves the needle next?
Right. I think there are three main things to keep an eye on. First, a definitive U.S. business development update. Like we said, an upfront payment, a term sheet, any kind of early economics announced there could re-rate the stock quickly.
Okay, the partnership deal. What else?
Second, the official NDA filing acceptance by the FDA, and then the setting of a PDUFA date. That usually happens in the first half of 2026 based on their timeline. That makes the regulatory path concrete.
Got it. Deal confirmation, FDA confirmation. And the third?
The third, and this one might have the most leverage, is any preclinical data readouts, or even better, partnerships related to that new GLP-1 delivery platform, the high visibility one.
News on the GLP-1 front could be big.
Potentially huge, yeah.
Okay, let's switch gears a bit then into our not financial advices segment. Given everything we've discussed, the clinical success, the market clearly wanting monetization, but also this new platform optionality, where's the potential leverage here?
Well, yeah, the setup is kind of interesting from a, let's say, strategic perspective. Again, not advice. But you have DPLEX100, clinically de-risked, targeting a multi-billion-dollar market SSI prevention. Huge need. Yet the stock price seems pinned down by that skepticism over BD execution.
Right. The market's not pricing in the full value yet.
Exactly. So if you operate under the belief, the thesis, that the market is maybe severely underestimating the value of the underlying delivery platform itself, that ability to provide a non-burst 60-day GLP-1 release, maybe that's where the hidden value, the real optionality lies.
Yeah. So the strategy isn't just betting on DPLEX100 getting a deal, but betting on the PLEX technology proving it's valuable beyond just SSI.
Precisely. The strategic bet or trade idea here would be to find a way to maximize exposure if that GLP-1 platform really materializes or gets validated. This means probably thinking longer term, maybe looking out towards the end of 2026.
Okay, so how would you structure that kind of bet?
Again, hypothetically, one way to think about it might be using something like out-of-the-money call options.
Yeah.
Targeting maybe Q4 2026 expiry, strike price significantly above where the stock is now.
Why options?
Well, it potentially hedges against time decay a bit compared to just holding stock while giving you that leveraged upside exposure. The rationale is simple. If good preclinical GLP-1 data drops showing that non-burst 60-day profile, or the big one, if they secure a major partnership for that delivery tech with a big pharma player in metabolic disease.
And then that optionality suddenly gets priced in
Potentially a very dramatic way. It's fundamentally a bet that the PLEX platform, not just the first drug off the line, is the multi-billion-dollar asset here.
That's a really interesting angle. Betting on platform versatility may be overriding the short-term worries about commercial execution for the lead asset. Okay, so just to quickly recap the whole story for everyone listening, PolyPid delivered really successful phase 3 data for DPLEX100, big clinical win. They secured their cash runway, guiding well into 2026, and they set a firm NDA timeline for early Q1 2026. But that success was slightly overshadowed on the earnings print by a wider net loss, mostly driven by those success-based stock compensation expenses.
Yeah, the overall tone feels, constructive but still measured. The market seems to be waiting to hear the sound of a commercial cash register, or at least a big partnership check, before really jumping aboard.
Which brings us perfectly to our final provocative thought for you, the listener. Is the market fundamentally underestimating the value of this versatile PLEX platform technology? And is the optionality offered by that potential non-burst 60-day GLP-1 delivery system the true hidden catalyst? Is that what's needed for PolyPid to finally catch up to the massive biotech sector rally we've seen play out recently? Something to think about.
And of course, as is absolutely necessary, we have to state clearly, everything we've discussed here today is purely for informational purposes. It should absolutely not be considered financial advice in any way. You must perform your own thorough due diligence before making any investment decisions.
Couldn't agree more. Thank you for diving deep with us today. We look forward to our next discussion.